Hey everybody, it's P with the introduction to prop firm trading. There's been a great bit of you that have been asking me about prop firm trading. For those of you that have not been keeping up with us, I am a prop firm trader as well. Right. So prop firms provide capital and infrastructure for traders to leverage and grow their trading strategies. Futures are a common instrument traded at prop firms. So I actually trade futures as well. Here is my certificate of passing their evaluation test. Okay. And I'll go more in depth of exactly what this certificate even means. Okay. So an overview of futures trading. One big one would be the leverage. Okay. Being able to amplify market exposure with minimal upfront capital. And we'll talk a lot more about what exactly that means to be able to amplify market exposure, right, with minimal upfront capital. You also have diverse instruments. You can trade a wide range of commodities, currencies, and indices. Okay, so there's a plethora of things for you to choose upon, for you to trade. Volatility as well would be the third biggest overview of futures trading, capitalizing on price swings to generate profits. Very similar to option trading, right? Most of you know me from option trading. We made a killing in option trading. But there's also a market in futures as well that I want y'all to explore. Feel free to explore, and I'm more than happy to share my insight with you. Okay. Benefits of prop firm trading. Now, here I have just a quick picture of a few different accounts that you can choose from. They have a plethora of different size accounts for you. Okay. So don't just think that these three are the only three that you can choose from, right? But one of the most common accounts that prop firms typically offer would be the 50K account. For this particular prop firm, this is actually Apex Funding prop firm. For their 50K account, they allow you up to 10 contracts or 100 micros on that 50K account, that 150K account. Okay. Their profit goal is 3,000. Their trailing threshold is 2,500. No daily drawdown, no scaling of the sort. Now, their brokerage is Ninja. Typically use Ninja Trader here. Typically, if you want to trade futures, you'll have to have a license, or you'll have to either lease a license or purchase a license, right? So you can lease a license and make like monthly, annual um, payments to access the license, or you can just pay it outright and own it. Also, real-time data fees will also apply. Let's just say if you wanted to put money into a account and trade those funds that you deposit into the account, you can very well do that, but just know that there are other fees that are associated with funding your own account. Okay. Here, this prop firm in particular, they offer, the license, the real-time data fees, everything's included. That's included for this price here, $167 a month. Now, most prop firm traders that I know, especially Apex prop firm traders that I know, we typically will purchase these accounts when they run their discounts, which they typically run them quite often. You know, that's how they make a lot of their money is by running these discounts for like 60, 70, even 80% off. So most times we're picking these accounts up for almost nothing, like 33, 34, $35. Okay, even $40. Right. And you participate in the markets, you look to make that profit go here. So essentially, if you wanted to pick up a 50K account, you know, me personally, what I've done is I've waited for them to have a promo, pick up the account for a pretty cheap price, and just trade it, right? Hit the 3K goal, and then you get funded. So once you hit that 3K goal, they'll actually give you a funded account, and we'll get into that. Now, the threshold is pretty much when you're trading the account that the account doesn't get a drawdown of 2,500 from where it's at. So, if you were to get up maybe $2,500 and then the account goes to you lose the $2,500, then you would hit that $2,500 threshold, if that makes sense. So just keep that in mind when you are taking L's and that's wherever the account is at the time. So if you're at, you know, you had made $1,500, so the account would have been at like $51,500. You hit a 25K threshold from there. So what's the math on that? So if you're at $51,500, you hit a $2,500 drawdown. If your account were to go from 51,500 to 49,000, then you would have hit the threshold. Pretty much is what that means. Okay. So just keep that in mind. And what this does is it really makes the trader focus on risk management, right? Because if you go up so much and then the account pulls down to $5,500, then somewhere along the line you're probably not using appropriate risk, and that's what this is all about. That's why they're allowing you to access so much capital for pretty much nothing, is to make sure that you actually know what you're doing, especially with risk, right? Why give someone a loaded gun if they don't know how to use it, how to handle a gun properly, right? Same thing with a car, fast car, right? Why put you behind the wheel of a Lamborghini if you never even driven a car before, right? So just keep that in mind, and you can check out the different profit goals and thresholds of the different accounts, right? But in a nutshell, that's what this is for, and that's what that's all about. Risk management and prop firm trading. Number one thing in risk management would be position sizing, right? How much money are you putting on the line? Determining the trade size to limit downside exposure. And that's exactly what we were just talking about, hitting that drawdown, that trailing drawdown, right? Making sure that you're not putting too much money on the table, especially more than you should and more than you can really handle, right? A lot of us want to make money rather quickly. And so we tend not to, especially retail traders, we tend not to think about the risk at hand. We just think about how much money can I make if I put down 10 contracts, 5 contracts, however many contracts. Okay. and not thinking just as fast as you can make this money, you can lose this money as well, right? And so you don't want to get into the habit of buying these accounts and failing these combines, these tests over and over again, having to reset the account, respend money when you could just position size appropriately. You could just put, go in with one contract, two contracts, three contracts, rather than trying to max out what you can get to try to hit that profit goal. There are some prop firms that won't even allow you to make X amount of dollars within a day, right? They'll have a threshold, they'll have a max limit that you can't hit in a day. You can't make more than X amount of dollars in a day because that's their rules. That's their trading rules. They're likely implying that you are not positioning, excuse me, correctly. And so, they want modest gains, likely from modest position sizing. All right. So also implementing a stop loss is very important. Protecting capital by automatically exiting losing positions, right? Knowing when to get out of a trade when it's not going your way is very important. That's one of the most important things about trading. Isn't really the making money factor because eventually you will make money as long as you can have the right principles in place and utilize those rules, right? Not breaking your trading rules. As long as you have a set system in place, you should be able to profit. Having stop losses is very important. The trade doesn't go your way, cut your losses, look for the next setup. That simple. Diversification is very important as well. Spread risk across instruments and strategies. Okay. Non-correlated instruments and strategies. Now, what does that mean? This means being able to look at different markets, whether it's you're looking at gold, you're looking at the indices, even different tickers such as ES, which would correlate to SPY, NQ, which would correlate to QQQs, the tech sector, okay, the Russell, all of those things, being able to pick apart which markets are trending, which markets big money is actually putting money into. That's very important to be able to read the market. Okay, so these three key steps are very important in risk management and proper trading. Funding and account structure. Funding accounts, prop firms provide trading capital to qualified traders. So I went over this and I'll go over it even more in a few. But remember, they essentially are giving you the keys to the car, to the ignition, right? They're giving you the keys to take control of your lives by utilizing their capital. All that you have to do is to show that you can manage risk properly and you can scale the account to their preferred threshold. Depending on the account that you pick, that's what they want to see. There oftentimes will give you a daily threshold as far as how many days they want you to have been trading the account. There are times where they will give 1 day, 80%, whatever percent off deal, which pretty much means that you can get the account for 80% or whatever percentage and only need to trade the account for 1 day. So if you hit, your threshold, that marker within that day, that's fine. Typically, they usually want traders to be trading at least 5 to 10 trading days. Usually, I believe it's 5 trading days before hitting that goal to be qualified. So even if you hit the goal on the second day, you would just need to trade 3 more days before they would qualify the account as a pass. Okay, and you could just literally open and close a trade. You don't have to actually be in a trade for very long. You could just literally hit buy and then sell, and it will count. Crazy, I know. Another key pillar would be profit sharing. Traders keep a percentage of their trading profits. Different prop firms have different rules. So be sure to do your research on how much each prop firm, the prop firm that you're looking to participate and trade with, how much money they tend to keep on their end, right? Whether it's 5%, 10% of your earnings that you withdraw, whatever have you, just make sure that you're doing your due diligence and you're doing your research, your homework, and knowing how much they're going to be taking off. Typically, I don't believe that it's that any of the prop firms really, especially the top five, have a really high, you could say, interest rate. I think that they're pretty much all reasonable, especially for all of the freedom and everything that they're giving you at such a cheap price. All right, there are scaling opportunities, being able to achieve higher profit share by consistency, meeting targets, right? So this is just being realistic. They're abiding by and following their guidelines, these rules will allow you to get into a habit, a system of scaling that you should be able to maintain and continue to utilize and use in your everyday day-to-day trading. All right. To allow you to scale your account and to just grow as a trader. All right. That's what we do it for. That's what we're here for, to grow our portfolios, grow as a trader, to learn every single day that we enter the markets. We are students of the game. Performance evaluation and scaling, pretty much went over this already, right? Profitability, consistent risk adjusted returns, right? They're looking to see that you can handle these accounts, be profitable, and again, manage risk, which falls under risk management, ability to control the drawdowns and the volatility. Knowing when and when not to enter the markets is just as important as knowing when to take profits. Okay. There will be times where you shouldn't be in a position, you shouldn't be looking to trade. Maybe during news, you know that there's some news coming out. Maybe you were in a position earlier and news is coming out in 10, 15, however many minutes. And you should know that it the best play would be likely not to be holding a position through critical news, right? You don't want to be holding a position during FOMC. That's just a gamble. They're not looking for gamblers. They're looking for trained professionals to trade these accounts. Okay. Growth potential, potential to scale capital and profit share. Again, this is important. Being able to scale the account, make withdrawals so that you get your piece of the pie and they get their piece of the pie as well. So, conclusion, next steps. All right. Best thing to do here would be to evaluate your skills, assess your trading strategies and risk profile. If you are someone that likes to play earnings, you just like to take gambles, you don't really want to follow a system, this I don't believe this is for you. Okay. If you like to follow a structure plan, a system, like to put a system in place, you have rules and you stick by your rules, this is likely for you. Okay. Research prop firms. Research, there are various prop firms out there. Feel free to message me if you have any questions on which prop firms I believe are some of the best, right? You can YouTube, Google. I would advise to YouTube, listen to what some of these other traders have to say. I've personally only used two prop firms. So I'm looking to venture off into more. But as of right now, I'm not as well acclimated with these prop firms as other traders are. I can just tell you my experience and give you testimony on what the prop firms I use. Okay. Apex is one of them. Okay. So just take that and hopefully you do your homework on these so that you can make the decision for yourself because I can't make it for you. All right. And after you've done your research, you evaluated yourself, your skills, skill set, start the process. Apply and begin your prop firm trading journey. Don't hesitate. Don't wait to pull the trigger. All right. You've already been given the mission. You've already been given the assignment. I am here helping educate you on the subject for those of you that have been seeing me mention and talk about prop firm trading, futures trading. This is it. This is all that it is, right? It's not so much different than option trading in the sense of submitting the trades, the orders, getting into these trades, taking profit, following rules, following your rules. Okay. Not so much different, right? There are some similarities, there are some differences as well, right? But in a nutshell, though, trading is trading. And this is definitely a way, especially if you are low on capital, not just if you're low on capital, but if you are low on capital, this is a way for you to take advantage of getting access to um, larger portfolios and being able to trade them and make money, build up your capital, and get back on your feet, even. And also, if you just love to trade, if you have a really nice trading system in place, this is also a way for you to put that system to the test and to see, how far you can go. Make money for these firms, these prop firms. They give rewards quite often. They have leaderboards. Some of them have leaderboards. So different ways to be recognized, different ways to reward yourself. They reward you as well, right? And just another way to get out there, beating the system. Okay. Well, that's all I have for you on the introduction to prop firms and to futures trading. Thank you.